The year is 1999. You're 28 years old. You work at a tech startup in Silicon Valley. You've been given stock options, thousands of shares. On paper, you're a millionaire. Your company hasn't turned a profit. It doesn't matter. The stock price keeps climbing. You quit your job, you buy a house, a Tesla Roadster. You're living the dream. Then, in March 2000, the NASDAQ peaks, and over the next 2 years, it crashes 78%. Your stock options? Worthless, your company. Bankrupt, your house? Foreclosed. And you realize something that shatters everything you believed. You were never actually rich. You were riding a wave, a millionaire wave, a moment in history when money was so cheap, speculation so wild, and delusion so complete, that millions of people thought they'd become wealthy forever. But waves don't last. They crest, they break, and they destroy almost everyone who rode them. This has happened 8 times in American history. 8 separate moments when millionaires were created by the millions, when fortunes appeared out of thin air, when everyone believed the good times would never end, and every single time the wave crashed. The millionaires were wiped out, and the wealth was transferred to those who saw it coming. Today, we're in Wave 8, the biggest, most extreme, most dangerous millionaire wave in human history. And if you don't understand the pattern, if you can't see the cycle, you're about to get crushed. If you want to know how millionaire waves are created, how they collapse, and where we are in the cycle right now, smash that like button and subscribe, because this channel reveals the historical patterns that predict the future, the wealth cycles that reshape entire generations, and the warnings that most people ignore until it's too late. And by the end of this video, you'll know exactly what's coming next. So, what is a millionaire wave? It's not just a period when people get rich, it's a specific historical pattern. A boom driven by new technology, new resources, or cheap money creates massive wealth for a specific group. Railroads, oil tech, credit, crypto. The wealth feels real. People believe it's permanent. They spend, they borrow, they speculate. But beneath the surface, the foundation is cracking, because millionaire waves aren't built on productivity. They're built on leverage, speculation, and delusion. And when the wave breaks, the fortunes disappear just as fast as they appeared. Here's the key pattern. Boom. Mass millionaire creation. Speculation, crash, destruction of the same fortunes. It happens every time. And the people who get rich in the boom almost never stay rich after the crash because they don't see the wave. They think they're geniuses. They think they earned it. But they didn't. They were just in the right place at the right time. And when the time changes, they're gone. Right now, America is entering the largest millionaire wave ever recorded. More millionaires are being created faster than at any point in history. But if you know the pattern, you know what comes next. Wave number 1. The railroad tycoons. 1800s. America in the mid-1800s is exploding. The country is expanding west. And the technology driving that expansion is the railroad. Trains can move goods, people, and resources faster than ever before. Fortunes are being made overnight. Cornelius Vanderbilt, Jay Gould, E.H. Harriman. These men become some of the richest people in the world. They own the railroads, they control the infrastructure, and everyone wants in. Investors pour money into railroad companies. New lines are built everywhere. Towns spring up along the tracks. The stock market soars. Millionaires are being created by the thousands. But here's the problem. Too many railroads are being built, far more than the country needs. Companies are taking on massive debt to finance expansion. And when the economy slows, when the credit dries up, the whole system collapses. 1873. The panic. Jay Cook and Company, one of the biggest investment banks, fails. Railroads go bankrupt. The stock market crashes. The New York Stock Exchange shuts down for 10 days. And the millionaires, most of them, are wiped out. The lesson? Infrastructure booms create wealth. But they also create speculation, overbuilding debt, and when the bubble pops, the fortunes vanish. Now look at today. AI infrastructure, data centers, electric grids, charging stations, fiber optic networks. Billions are being poured into building the infrastructure for the next economy. Millionaires are being minted in AI startups, in cloud computing, in energy transition companies. But how much of it is real? And how much is speculation? History says most of it will collapse, and the millionaires riding this wave will be gone when it does. Wave number 2, the oil barons. 1900 to 1930s. Oil is the new gold. The automobile is taking over. Factories need fuel. Ships need fuel. The world runs on oil, and the men who control it become unimaginably wealthy. John D. Rockefeller, Standard Oil, the Texas oil rush. Fortunes are made, drilling, refining, transporting. Entire states, boom, Oklahoma, Texas, Louisiana. The oil barons don't just get rich, they reshape the economy. They build monopolies. They control governments. They live like kings. But then the cracks appear. Oversupply, too much oil, prices collapse. The government steps in. Antitrust lawsuits break up Standard Oil, and then, 1929, the Great Depression hits. The stock market crashes, demand for oil plummets, and the oil millionaires. Many lose everything. The lesson: resource booms create extreme inequality, but they also create volatility. When supply exceeds demand, when governments intervene, when the economy crashes, the wealth evaporates. Now look at today. Lithium, rare earth minerals, cobalt. The materials needed for electric vehicles, for batteries, for the green energy transition. Fortunes are being made. But what happens when supply catches up? When new technologies make lithium obsolete? When governments nationalize resources, the oil barons teach us that resource wealth is fragile, and the millionaires in today's energy transition may be tomorrow's bankruptcies. Wave number 3, the industrial magnates, steel, automobiles, manufacturing. This is the wave that built modern America. Andrew Carnegie, Henry Ford, Walter Chrysler. These men didn't just get rich, they industrialized the nation. They created the middle class. Factories employed millions. Wages rose. The American dream was born, and alongside it, a new millionaire class. Factory owners, suppliers, investors. The stock market boomed. Everyone believed industrial America was unstoppable. But innovation doesn't stop. New technologies emerge: automation, competition, market saturation. And then, 1929, the crash. Industrial stocks collapse. Companies go bankrupt. The fortunes built on steel and automobiles are destroyed. The lesson: even the most productive booms, the ones that create real value, end in collapse when speculation takes over. Now look at today. The old industrial giants, the car manufacturers, the steel companies, the legacy manufacturers, they're being disrupted. Tesla, SpaceX, AI-driven automation. The millionaires of the 2000s, the ones who built wealth in traditional industries, are being replaced by a new wave. And just like in the 1920s, most of them won't survive the transition. Wave number 4, the credit kings, 1950s to 1970s. World War II is over. America is booming. The suburban dream is born, and it's all built on credit. Mortgages, car loans, credit cards, consumer debt explodes. Banks become the new millionaire makers, real estate developers, mortgage brokers. The financial class grows rich, lending money. The middle class borrows to buy homes, cars, appliances. Everyone is living beyond their means. But it feels fine because the economy is growing. Jobs are plentiful, wages are rising. Then, the 1970s hit. Stagflation, high inflation, high unemployment, interest rates skyrocket. Suddenly, all that debt becomes toxic. Mortgages default. Businesses fail. The suburban dream becomes a nightmare, and the millionaires who got rich on cheap credit, they're destroyed when rates rise. The lesson: wealth built on cheap credit collapses when credit gets expensive. Now look at today, 2008 to 2020. The longest period of near-zero interest rates in history. Mortgages are cheap. Car loans are cheap. Student loans explode. Corporate debt hits record highs, and a new millionaire class is born. Real estate investors, venture capitalists, anyone with access to cheap money. But now, interest rates are rising. The free money era is over. And just like the 1970s, the millionaires built on cheap credit are starting to fall. Wave number 5, the tech millionaires. 1990s, the internet is here, and it's going to change everything. At least, that's what everyone believes. .com companies are being founded every day. Pets.com. Webvan eToys. Companies with no profits, no business models, but massive stock valuations. Initial public offerings create overnight millionaires. 25-year-olds become CEOs of companies worth hundreds of millions. The Nasdaq soars, everyone wants in. Day traders quit their jobs. Ordinary people are investing their life savings in tech stocks. The belief is simple: the internet will make everyone rich. Then, March 2000, the bubble pops. The Nasdaq crashes 78%, trillions of dollars evaporate. .com companies go bankrupt by the hundreds. The millionaires gone. The lesson: technological hype cycles explode before they stabilize. The internet was real. It did change the world, but 90% of the companies were garbage, and the people who got rich in the boom lost everything in the crash. Now look at today. AI, artificial intelligence, is the new internet. AI startups are raising billions. Valuations are insane. Companies with no revenue are worth more than established giants. And everyone believes this time is different. But is it? Or are we watching the exact same pattern play out again? Wave number 6. The real estate and credit bubble millionaires. 2000 to 2008, the dot-com crash is over. The Fed slashes interest rates to stimulate the economy, and cheap money floods into real estate. House flipping becomes a national obsession. Shows like Flip This House dominate TV. Ordinary people are quitting their jobs to become real estate investors. Mortgages are handed out to anyone with a pulse. No income verification. No down payment. Subprime loans explode, and Wall Street packages these toxic mortgages into securities and sells them as safe investments. Millionaires are being created everywhere. Real estate agents, mortgage brokers, investment bankers, hedge fund managers. The wealth feels unstoppable. Then, 2008, Lehman Brothers collapses. The housing market crashes. Foreclosures spike. The financial system seizes up, and the millionaires wiped out. Real estate investors lose everything. Banks fail. Hedge funds blow up. The lesson: leverage-based wealth collapses the fastest. Now look at today. Housing prices are higher than ever, but wages haven't kept up. Mortgages are harder to get, but prices are insane. And just like 2008, speculation is back. Investors buying homes to rent, corporations buying neighborhoods. The foundation is shaky, and when it cracks, the millionaires built on real estate will fall again. Wave number 7. The everything bubble millionaires. 2010 to 2020. This is the wave that changed everything. After the 2008 crash, central banks around the world panic. They slash interest rates to zero. They print trillions. Quantitative easing becomes policy, and with free money flooding the system, everything goes up. Stocks, bonds, real estate, crypto, NFTs, tech startups, meme stocks. For a decade, if you owned assets, you got rich. Tesla millionaires, Bitcoin millionaires, GameStop millionaires, NFT millionaires. The belief is simple. Everyone can become wealthy when money is free. Retail investors flood into the market. Apps like Robinhood make trading easy. SPACs, special purpose acquisition companies, create instant fortunes. The wealth feels democratized, but it's not real. It's inflation. It's asset price inflation driven by central bank money printing. And when inflation finally hits the real economy, when the Fed is forced to raise rates, the bubble starts deflating. Crypto crashes, NFTs collapse, tech stocks fall, meme stocks die, and the millionaires, many are gone. The lesson: free money creates the illusion of wealth. But when the money stops, the illusion shatters. Wave number 8. The 2020s mega wave, the most extreme ever. Here we are right now. The biggest, fastest, most dangerous millionaire wave in human history. The AI boom is creating billionaires overnight. OpenAI, Nvidia, Microsoft, Google, valuations are exploding. But it's not just AI, it's everything. Tech consolidation. The top 5 companies control more wealth than entire countries. Asset prices are inflating simultaneously. Stocks, real estate, crypto, fine art, even collectibles. Millionaires are being created faster than ever. But here's the problem. Income is lagging. The middle class is shrinking. Wages aren't keeping up. The gap between millionaires and everyone else is the widest it's ever been, and all the conditions from the previous 7 waves are present. Cheap money, speculation, technological hype, leverage, delusion, overconfidence. This wave has the biggest gap between the wealthy and the rest. And history shows that the bigger the gap, the harder the crash. So what's the pattern? All 8 waves share the same DNA. First, cheap money. Whether it's railroad bonds, oil profits, credit expansion, or Fed money printing, every wave starts with easy access to capital. Second, new technology or resources. Railroads, oil, automobiles, credit, the internet, real estate, AI. Innovation drives the boom. Third, speculative mania. Everyone believes they can get rich. The fundamentals stop mattering. Valuations become absurd. Fourth, sudden liquidity collapse. The credit dries up, interest rates rise, a crisis hits, and the money disappears. Fifth, violent wealth destruction. The millionaires created in the boom are erased in the crash. And sixth, the millionaire class is reshuffled every time. The winners of one wave are rarely the winners of the next. So what does the 2020s wave mean for the U.S. middle class? Millionaires are rising faster than at any point in history, but the middle class is shrinking. AI is replacing mid-skilled jobs. Accountants, lawyers, writers, designers, customer service. The jobs that built the middle class are disappearing, and wealth is pouring into assets that are inaccessible to most families. You can't buy a home, you can't afford stocks, you can't get into the venture capital deals. The wealth is concentrating at the top, and the gap is widening. Every millionaire wave in history ended with a transfer of power. The railroad tycoons were replaced by the oil barons. The oil barons were replaced by the industrialists. The industrialists were replaced by the credit kings. The credit kings were replaced by the tech millionaires. And the cycle continues. But here's the final warning. The crashes don't just destroy millionaires, they destroy entire classes. The middle class of the 1920s was wiped out in the Great Depression. The suburban dream of the 1970s was crushed by stagflation. The dot-com millionaires of the 1990s were erased in 2000. The real estate millionaires of the 2000s were gone by 2008, and the everything bubble millionaires of the 2010s are being erased right now. The next few years will decide who rises and who gets erased. The 2020s megawave is already cresting. The signals are flashing. Rising interest rates, inflation, geopolitical instability, corporate bankruptcies, layoffs in tech, crypto crashes. The wave is breaking. And just like the previous 7 waves, most of the millionaires being created today will be gone tomorrow. But some will survive. The ones who understand the pattern, the ones who see the cycle, the ones who move their wealth before the crash. History doesn't repeat exactly, but the pattern is clear. Every millionaire wave ends in collapse. And wave 8, the biggest of them all, will be no different. The only question is, will you see it coming? Or will you be one of the millions who thought the wave would last forever?